Of course, if you've just met the honorific Loke, who is the Minister of Transport of Malaysia.
Well, of course, for Malaysia, we are seeing very strong growth in the domestic sector. I think we have recovered back to the pre-COVID level. As I mentioned earlier, overall, passenger movement, we are in the region of 70 to 80% pre-COVID. Our major markets have recovered, for the exception of China. I think China is still challenging because of probably the slower opening up of the Chinese market. And in terms of the Chinese tourist arrivals, we have not seen to the level back before 2019. Before 2019, we have seen the arrival of 3 million Chinese tourists in Malaysia. But right now, we are probably in the region of just over 1 million. So it's just 1/4 of what we saw before COVID. So that is a big challenge in terms of regaining back to the level of pre-pandemic. That's what I think I mentioned earlier. That's probably the reason why in terms of international movement, we have not seen the growth compared to other regions in Asia Pacific. I think in terms of major factor is the Chinese market.
It's important for us to really scale up fast and aggressively when Singapore actually reopened its border back in 1st April 2022. So at that time, Scoot was operating below 50% of the pre-COVID capacity, around 40%. But happy to share that at this moment, in this month, we are actually operating close to 95% of pre-COVID capacity. The restoration of the capacity back into the market has been well received by our customers. We have been reporting more than 90% load factor for the past 7-8 months, and this is the trend that we are seeing going forward. I think linking to what the Minister has said, that the belief in the region that travel demand will continue to be robust, Scoot has actually taken the initiative to lease 9 Embraer E2, which will be joining us from March next year. I think that will give us a lot more capacity and a lot more options to really increase the capacity beyond pre-COVID. I think it is for us the aim to go beyond pre-COVID, hopefully by the end of this year, if not in the early part of 2024.
As just to echo what he was saying, I think the market in Asia was a bit slow to start. I think a lot of the markets opened, I think, a year slower than everybody else. But I think, in the airlines in Malaysia, we tried our best to fill the gaps as much as we can. But on the good side, our load factor has pretty much come to the pre-COVID levels. We're probably going to look at posting about 82% load factor towards year end. But on the good side as well, yields also is on the positive side. I think yields now, we're about 84% higher than pre-COVID levels. But I think we have to bear in mind that moving into the fourth quarter, fuel is a bit on the negative side. Currency in the ringgit versus the US is weakening. So we got to make sure that we try to maintain and make sure that we're sustainable. But on the good side, I think, the demand is back. The only weaknesses we see going in the next 6 to 8 months, the only market that we potentially see is China has not really opened up at 100%. Every other market, I can safely say, has fully recovered. So once we get more aircrafts in, I think we'll be there as well to support that.